Doug, congrats on winning the Yahoo Finance Company of the Year award. Good stuff.
Thank you. Thanks. We're honored. I will pass that on to our associates.
Appreciate it. So I went back ahead of this interview. I first talked to you 2017. We both look a little bit younger, but we still kind of look the same. And I asked you then, somewhat nervously, do you ever check the stock price? And you said, no, I don't check the stock price. Have you checked it this year? It's up almost 70%, record high.
Yeah, I'm aware. I'm going to try not to focus on that too much. It's the inputs that drive the outputs, and I spend my time on the inputs.
So the same answer as 2017. You have no peak, nothing?
That's how you get good performance, is you focus on the details. As they say, retail is detail.
We're going to break down how you've gotten to this point financially, but you're almost 11 years into this job. At this point in your tenure, what's the toughest part of your gig?
It's gotten easier, actually, I think.
Really?
Yeah, we have a great team. No doubt there are challenges and change is happening, but we're clearer now on what our plan is, and we're on with execution. You can see some of that in the results, but we still have a lot of runway in front of us, and we're all excited about that.
I have told the Yahoo Finance team something has clicked at Walmart the past 18 months. Something unlocked, something got unleashed. Like, what happened? Because your sales have accelerated, your profits have accelerated, and I don't see that happening at many of your competitors.
I go back to before the pandemic when I think about that, and the work that we did to make some investments. We invested in wages for our associates. We invested in our people, things like education. We invested in lower prices. We invested in e-commerce. We invested in technology, all within a pretty tight period of time. That obviously creates some pressure on the bottom line, and that creates some overhang for how people think about Walmart. But if you get to the pandemic and you look at how behaviors changed, and curbside pickup, for example, grew at a much faster rate, delivery grew at a faster rate, that was work that we had already done before the pandemic that bore fruit during that period of time. And I think it caused a lot of people, customers, our associates, to recognize that we were on the right track. And we just kind of haven't looked back since then. This omnichannel business that we're building. Yes, we run great stores and clubs around the world, but we're building e-commerce capabilities that include first-party inventory ownership, as well as a marketplace and all the things that go with that. Membership related to delivery, data monetization, fulfillment services. Those things are mutually reinforcing, and that continuum of work, I think in more recent times, has shown up in the performance. And so people are giving us credit for it. Before that, they heard the words, they wanted to see more numeric progress, and now they've seen some of that.
I will say, we're in this Arkansas store. This is one of the nicest looking Walmarts I've ever seen, really organized. I mean, stores still matter.
If you're gonna run a store across the street from the home office, you'd better be a pretty good store manager, and Ryan certainly is. But yeah, stores matter. Stores matter, Sam's Clubs matter. I've been traveling, as always, this month, and I've been in China and Mexico and here. It's a great advantage to have so many great associates that are purpose-driven, a strong customer service culture, and the physical assets, which include not only the stores and clubs, which are increasingly becoming capable of handling pickup and delivery more effectively, being hybrid, and a supply chain behind all of that. All of the assets that are physical in nature, when you layer the digital capabilities on top of those, you get something unique.
Is there one part of the business that has surprised you this year?
Not really. I mean, I think that the trajectory of the growth rates is something that we've had in our forecast. Underneath that, what we're focused on is getting even faster. I just left our officers meeting a few minutes ago, and we were talking about speed, particularly as it relates to design and customer experience and the tech underneath that. We know what to go do, and we're working together more effectively to get those things done faster, all with the goal of doing 4 things for customers and members: lower prices, a really broad assortment of products and services, broader than I could have ever imagined, a great experience buying it, whether it's in the store, in the club, picked up or delivered, and building trust. Building trust on price, building trust in every way as it relates to the customer experience and the way we behave as a company.
Is it hard to move the needle? I mean, how are you doing this at your scale? Is it hard to put up these
We don't
growth
think
rates?
about scale that much. Actually, scale, Lee Scott used to talk about this when he was CEO. Scale brings disadvantages to it. Maybe some advantages, but there are a lot of disadvantages related to fighting bureaucracy and those kinds of things. We try to keep this place small. You know, we get together with our store managers multiple times a year. We're making store visits all the time. We're communicating to all kinds of associates and listening to all kinds of associates. And by doing that, you can try to think small so you can move fast and make the company feel more personal in nature. And that's what we try to do.
Is this the year that a lot of tech initiatives that you put in place, maybe when I first talked to you in 2017, that they start to unlock? Like, what are the biggest tech initiatives that have changed Walmart?
Suresh Kumar and his team have done a fantastic job. It's, in my experience, not some sort of breakthrough year. It's just a continuum. It's just been progress, dealing with tech debt, modernizing our architecture, creating more speed on front-end applications. That's been happening, and I think it's continuing to build. And it shows up with the customer member experience in ways like convenience. If you look at kind of big picture what's happened in Walmart in recent years from a customer point of view, is you still have low prices, and now you've got access to hundreds of millions of items on Walmart.com. It's not just the store assortment. Walmart's different than it was before, and you get convenience. So recent survey results have shown that customers are giving us about as much credit for convenience as they have price, and that was not the case before. Sometimes it's convenient to run into the store and pick something up. Sometimes you want to have it picked up curbside. Sometimes you want it delivered. We can do all of that now, and Omnichannel helps us do that.
Clearly, I missed something on Walmart in 2017. Like, as I'm sitting here with you now, how do you think Gen AI is going to impact your business? Like, if we're having this conversation 5 years from now, what changes will I notice in the store? Or maybe things I won't notice and they'll just magically show up on your earnings day?
I'm really excited about what's happened already, and it's an energizing experience as leaders to have to learn and apply so quickly. The cycle times as it relates to generative AI are much faster than a lot of the technology, maybe all the technology that I've dealt with in my career. It's going to help us be more anticipatory for customers and members. Search is going to change. The world will look more like personal shopping assistants than it will an old-fashioned search bar with a laundry list of results that you and I then have to work through as a customer. Just saving us time, making it more convenient, helping us solve problems. We, in the past, if I wanted to throw a party for the college football playoffs, I was typing in soft drinks, chips, dip, whatever. Yeah. Now I say, I'm throwing a party for the college football
That's cool.
games. What do I need to know? And the search results come back in more of a solution-oriented way, and you can just get that job done so much faster.
How far do you think you are ahead of your competitors in terms of technology?
I'm not sure we are. I don't want to relax at all as it relates to that. I'm encouraged by the progress we've made, but I think we got a lot of improvement in front of us.
Is it hard not to get complacent after a big year?
No. I think culturally, our folks get it. As I mentioned just a minute ago, I was together with our leadership team this morning. We're talking about Warren Buffett's comments that he made during one of our board dinners many years ago about avoiding the ABCs of business: arrogance, bureaucracy, and complacency. So today I was asking our big group, do you remember what the ABCs are? That's what we're trying to avoid.
Consumers, I was walking the store, and it's hard to judge this, but people seem, they're watching prices still. How cautious is the U.S. shopper?
They've been pretty consistent all year. Yeah. I think people know prices have gone up. They're experiencing that. And then for some folks, it is painful, and they want lower prices. And that's what we're wired to do. I look at this company, I actually started working for Walmart 40 years ago, continuous service. I think it's been 33 now. And what I have learned from this company is that one of its characteristics is that it's wired to save people money. And I think that's a great service to society. So we have a lot of rollbacks right now. I think we got more than 6,000 rollbacks across all the categories. We're working with our suppliers constantly to try to figure out how we can get more efficient and what can we do to get prices down for people. Now, our business model is to make a little bit of margin on a lot of volume by saving people money. So that's what we're trying to do as quickly as we can.
Why are prices still high for stuff?
Over the period of the pandemic, when supply chains got stretched, a number of things happened. Input costs went up. Farmers experienced that with the inputs that they use to grow things. Wages went up, which is a good thing in many ways. And so new levels have been reached that in some categories won't go back down. Now, general merchandise, things that are not food, has come back down much faster. In fact, we're right now in the US, we're deflated by about 4%. Things are cheaper in the non-food side of the store than they were a year ago. And a year ago, they were cheaper than they were the year before. So general merchandise came back down. Fresh food is moving around quickly. We're just talking about eggs. Unfortunately, eggs are high right now. Some of the other categories have come down. Those cycle times are quicker. Dry grocery, consumables, kind of processed food and things like paper goods and cleaning supplies have been more stubborn, and they're much higher than they were 3 or 4 years ago. And we're obviously trying to work with our suppliers to get those prices down. Sometimes private brands help us do that, but we really want to work with our branded manufacturers to do it.
When do food prices come down? Where's the egg relief or the gallon of milk relief?
That'll come faster than dry grocery. Yeah. So it'll just be week to week. Prices are going to go up and down. Some things are cheaper than they were. It's just varying by category.
When you talk to your employees, and you just have tons of employees, like what are some of the struggles they're dealing with right now?
First of all, I would express gratitude to them, especially since you're recognizing the company. We have a great set of associates around the world, and it is one of the pleasures and honors of my life to spend time with them. We've got 2.1 million of them, so you're kind of asking what are people in the world struggling with or what are their challenges? So we do things like invest in education so that those people that want to pursue a college degree or certificates can. We've been raising wages. We're trying to help them get clarity on what hours they're supposed to work, what career opportunities they are. I look at Walmart, which won't surprise you given how I started, as a ladder of opportunity. The company creates this ladder and our associates decide how high they want to climb and where they want to go. And that's what I'm trying to strengthen through all the decisions that we make, whether it's healthcare benefits or compensation.
Stock options. That was a big deal.
Yeah, we gave equity to our store managers for the first time, and we have an associate share purchase plan where the company pluses up investments that our associates make to buy Walmart stock. And we had about 400,000 associates participating in that program. A lot of times people think equity, well, the leaders are benefiting from that, but others aren't. We had 400,000 people participating in it before we split the share price. I guess it's been almost a year ago now. And after that, we had an increase, last time I looked, of 40,000 more people that are now participating in that plan where we put 15% on top of what they invest in our share price up to a certain limit. So I love the fact that everybody's benefiting from that and not just the leaders of the company.
What's the next area of focus for employees?
It's to help them with technology. I mean, we'll keep increasing wages, we'll keep investing in education, create opportunities for people to get promoted, but the technology that we're deploying now is going to make the job more enjoyable. I mean, people want to serve customers, they want to interact with people. There are jobs that we have in distribution centers and in stores that are physical in nature. They're sometimes too repetitive, cumbersome. You might need to run to the back of the store to get something done when really you should be able to get that done on your handheld. We've launched an AI product called My Assistant on their handheld devices, and we've had over 50,000 people so far ask about 1.5 million questions, which is probably saving them from having to call someone on a radio or run to some part of the store to ask somebody a question. We can just make the jobs more enjoyable and let people get freed up to do what they love doing.
You're getting ready to open a big, beautiful headquarters near here. What was the message? Like, what's the message you were sending to investors of the world? It is a big, beautiful campus.
The message is about the future. We moved into the home office that we have now that Sam Walton called farmland on the outskirts of Bentonville. Yeah, it was a warehouse. Oh. We moved into there a really long time ago, and we were scattered across Northwest Arkansas in former store locations and other distribution centers, and it wasn't very efficient. And it's a difficult decision to invest that money to create a new home office, but luckily the company owned a lot of land from many years ago. And now we've got a space where it's going to be very pleasant and enjoyable to come to work. We think it'll help us attract and retain talent, and it orients us towards what's next, not yesterday.
Was it hard to decide or make that decision to have the corporate team back in the office?
No. We've been trying to make our way back as soon as it was safe from a health point of view. It's just so much more effective. We learn so much by being around each other. We move faster, you build trust. I think companies generally kind of traded on some of the equity and trust they built with their teams during the course of the pandemic. And we could execute remotely from a task point of view, but not as much innovation, not as much relationship building. The things that we get by being together are sometimes hard to measure, but really valuable to us as we try to shape a culture and attract people that are purpose-driven and have them feel really connected to the company.
You mentioned the future. Then what is the future of Walmart? Let's just start with the U.S. because I want to talk a little bit about the international business too. what does that next 10 years look like for Walmart?
Continued growth in the areas that we've already started. We probably launch some other new businesses along the way, and we keep changing everything we can to take all the stuff that people love about shopping and dial it up and invent new things related to discovery or other aspects of shopping that we love doing, and take all the things we don't like and try to get rid of them or diminish them. And technology will do that. Innovation that we as leaders and associates contribute to it will help do that. I think it's as simple as that. We're going to keep trying to make things better for customers.
Every earnings report I've read from Walmart this year, maybe even a little bit last year, you're calling out upper income households, market share gains from upper income households. Why do you think you're gaining their dollars? And where do you think they're coming from?
I think number one, we made things more convenient for everybody. Everybody wants to save money and everybody wants to save time. But it's a bit of a continuum depending on your income level. People lean different directions, but they all want both. And in the recent years, we've changed enough things that make it more convenient to shop at Walmart that we've been able to retain people that make more money. I think Walmart Plus has helped. I think our store models have helped. Our fashion areas are more attractive. It's a better experience in the stores that we remodeled, and I think people have seen that.
And then the other component not a lot of people talk about, but I used to be an analyst, so I see these things differently on your release. Inventory, really by each division, but Sam's Club and Walmart US 2, really lean. Like, what have you done there? How have you been able to do more sales on less stuff in the store?
The pandemic went away. Some of the supply chain stress went away. We have had some challenges like the port strike that happened and maybe the one that's to come. But the team's done a great job of driving in-stock first. Our goal isn't just to eliminate inventory, it's to improve in-stock as we reduce inventory. Taking timely markdowns, keeping our merchandise fresh, and then our merchants just picking the right items at the right price. If you get inventory turns, you don't have as many markdowns and things just flow. So when the world's a bit more normalized, that helps us be able to flow goods more effectively.
On the international business, also very, very strong year, really by country. Walmex, the Sam's businesses in China.
Yeah.
What do you attribute that to?
Catherine and her team are doing a great job, and we're in a really strong set of markets now. You've followed the company for a long time.
Back to Asda.
You've seen us, yes. Yeah. You've seen us make investments in new areas like Flipkart and PhonePe in India. You've seen us exit some other markets. So one, we're in good businesses. Number two, we have leaders in the markets that are really capable. And then some of the other things we've done, the IP that's flowing across markets now with this strategy that we have, the tech that's flowing, supply chain expertise, the work that people are doing together to make the total greater than the sum of the parts is showing up in our international results, and really proud of the team for that.
Do you get concerned that some of this momentum pulls back if we have a trade war?
We want prices to be low for our customers, and we want flow to go smoothly. So when we interact with governments, all governments, we try to advocate for that consistency. In the case of the U.S., we've had tariffs in place in various forms forever, I suppose, and a batch of tariffs that happened in 2017 that we're used to operating with. So, we're positioned to manage it, but what I worry about is customers experiencing higher prices, and we're going to do everything we can to try and keep them low.
What do you tell government leaders? Say, hey, guys, you push through these tariffs, and we have to take up prices a penny or two, and it might impact the consumer. Like, how are you communicating the necessity to keep prices low?
Those leaders have to make those choices. I think from our point of view, we encourage them to be strategic and really thoughtful with them, and help them understand how the math works. If we are the importer of record on some things and we pay a tariff, we'll eat as much as we can, but some of that is going to flow through and look like inflation to customers because it is inflation to customers. Here in the U.S., about 2/3 of what we sell is grown or made here, which helps a lot. That other third is imported from around the world, produce from Mexico, some of the imported goods that we have in seasonal categories and electronics and toys from China, for example. We have to manage that mix. One of the great things about retail is you're a portfolio manager and you get to manage the mix of the categories. So we try to be thoughtful about what we're putting in front of customers to show them value, but also help manage the costs of those things.
How should an investor think about, 2025, and you operate these beautiful Sam's Clubs in China, like if we hear more news along, tensions, like how do you protect your business in China? Like how do you deal with that?
I was just in China a few weeks ago, and I was in a Sam's Club that was, to your point, beautiful and high volume. The week before I got there, we opened our 50th, and we think we can have a lot more. When I talk to government leaders, for example, on both sides, the fact that Walmart exists in both places is actually a good thing. Countries that trade together tend to be more peaceful with each other. So trade is a good thing. Sensitive areas, sensitive IP and things like that are considerations. But in our case, we're not involved in those categories. We're not making chips. We are importing Washington apples to China, and we're bringing toys from China to the U.S. And so we're a little less controversial.
Would it be easier to make more things in the U.S.? Is that possible?
It's growing. We work really hard on that, state by state, supplier by supplier, and we're making progress. Our U.S. percentage has been going up. We've established some big goals related to that. And one of the most fun days of the year is this open call event that we have here, where we invite U.S. producers to come see us if they're not currently doing business with us. And a lot of people get yeses. Some people get yeses for in-store volume. Some people get them for Walmart.com.
Cool.
But we meet a lot of new American producers, and we love doing that.
After all these years of talking to you, one thing I never asked you is about the special relationship of like the Walton family. And this is top of mind for me because I did a podcast with David Marriott, of course, his grandparents founded Marriott. It's not often you get that. Like, what is it like having a Stuart Walton on the board? Like, what does he offer? And, what is your interaction with family members?
It's a huge advantage and very positive. I'm grateful for it. Having a big shareholder that is long-term oriented, that cares about our associates, cares about culture, is so helpful. This is a public company. It behaves like one. If you were in our boardroom, it would feel like a public company. But it's also true that the family being there, Greg Penner, who is our chairman, does a fantastic job. He's worked in the company. He's been chairman for a long time, following Rob Walton, who did an incredible job and had a great run from the very beginning, sweeping floors in the Five and Dime to being the chairman of the company. And now Stuart's involved. Stuart's leading our technology committee and helping us think about the future. All of those interactions are helpful, and I couldn't be more grateful.
How have you stayed grounded as a leader?
I'm married. And retail is humbling. If you start thinking that you've got it all figured out, retail just has a way of making it clear to you that you don't.
That's a very good point. It's a lonely world. These are lonely jobs, I imagine. How have you dealt with the stress of this?
I don't choose to look at it that way. I have a great team, a really capable team. I meant what I said earlier about my job getting easier because they're doing so well. And I'm pretty transparent, which means that they get to carry some of this weight with me. If I'm struggling with something or we're trying to solve a hard problem, we do that together, and that helps a lot.
I know you're you're an avid book reader. And I don't know if you put out your reading list yet, right?
Not yet.
What is on your plate for next year?
Oh, for next year?
Yeah.
Dude, I've got a stack. People send me books
just keep setting you
left
up. You're the
and right,
CEO of Walmart.
and it feels like a treadmill. I've got to keep up with these great incoming books. One that I just finished recently is called Co-Intelligence from Ethan Mollick at Walton, and it's about AI. And we invited Ethan to come here and speak to us. He's going to come back and talk to us again soon. I'm looking for clarity and provocation to make sure that we're being as aggressive with generative AI as we should be while managing the risks. And he's helped with that, for example.
I have to say, Doug, before we wrap this up, you seem the same guy that I met in late 2016, early 2017. Not much has changed. But clearly things have changed. Like, how have you changed as a leader? How have you changed as a leader? How are you different? Like, have you reflected on your journey? I
was less of a risk taker than I am now. This job has forced me and the company to take risk in some areas, and I'm a pretty conservative, kind of play it safe kind of person. But to get the change that we needed, we had to take risks in the form of acquisitions, in the form of big investments. Those can be breathtaking at times, but that's one way that I know I've changed, is I'm faster to accept risk than I was before. I think the other thing that I've experienced is just leadership growth in terms of delegation. You get promoted when you're young because you're a good individual contributor. That flips at some point, and you have to get things done through other people and find fulfillment and joy from their success. And I'm old enough now that that's actually occurred to a degree.
Where do you see yourself in 10 years?
I have no idea. Wherever Shelley tells me to be, my wife, I suppose. I don't know. I'm focused on what I've got right now, and it's great.
Well, Doug, it's always a pleasure. connecting with you. Again, the Yahoo Finance Company of the Year winner, Walmart. I thank you for the time. This has been a real cool thing to just hang out in the store and see you again. We
Thanks,
appreciate
Brian.
it. Yeah.
Thanks for recognizing our people.
Thank you so much. Appreciate it.
Thank you.